So guys, last week was an exciting one for my trading journey, using daily bias, internal and external range liquidity, and the Fibonacci retracement tool. I managed to secure 8% on my FTMO phase 1 account and 4% on my FundedNext one-step challenge, trading GBP USD and EUR USD. These tools are essential in my smart money concept approach by aligning my trades with the daily bias, targeting liquidity points, and using the Fibonacci tool for precision. I consistently captured high probability trade setups. Let me break down how this strategy worked in the last week's market, guys. So traders, welcome back to the channel. It's been a while I've actually made any videos simply because I was actually taking care of my October class with my students. So in today's video, we'll be looking at how to plan your day and make the best trading decision by aligning yourself on the right path of the market using my daily bias trading strategy. So basically, this is how my week ended, catching a 1:4 risk to reward trade on EUR USD and 1:4 risk to reward trade on GBP USD using this same strategy. So grab a pen and a note. Let me break it down for you guys. What we're actually going to talk about is my trading plan. It's my trading plan, which consists of 5 things that I actually consider before taking a trade in the forex market. So the first thing is my daily bias, how I'm able to mark out my daily bias. Then the second thing is for me to identify my internal and external range liquidity. Then the third thing becomes my previous day low and my previous day high. Then my fourth confluence is to combine or wait for pullbacks on my Fibonacci retracement tool levels. And the last thing is to pick my entry from the 5-minute time frame. So let's dive right back into the video. So last week Friday on EUR USD, I actually marked my internal range liquidity here, which was this fair value gap, which happened between from Tuesday, Wednesday, and Thursday. So that was the internal range liquidity I had on Thursday. So me looking at this, my daily bias, I was very bearish on EUR USD. Why? Because the previous 4 days or the previous 5 days has been very bearish. So for me to actually align myself on the right part of the market, I actually had to identify my internal range liquidities and also target my external range liquidity as my take profit levels. So what happened here was on a daily time frame, I found this fair value gap running very smoothly here on a daily time frame. So when Friday opened, I was actually expecting Friday open high to tap into the fair value gap so that we would actually create what? A new low, targeting previous day low, which is Thursday lows here, as my liquidity level. I'd actually marked out my key levels here. Based on daily bias, I knew we've been very bearish and I was only looking for sell opportunities because we've been very bearish, and I was actually expecting Friday open, create a high, tap into this fair value gap, then recreate a low targeting this previous day low here as our take profit. What I did was to mark my fair value gap here before Friday open. So I was only waiting for price to open, come all the way up into my fair value gap before I will look for my entry, targeting this previous day or this Thursday low, my profit target. So what I did was to scale down to the 1 hour time frame. So I actually had my fair value gap here sitting right above here. So Friday opened and we saw price market moving to the upside aggressively, and what I did was to identify my inducement level. Basically looking here, I had this to be my inducement level, which I knew price would actually come all the way up to grab liquidity above this Thursday highs here before you actually head towards the downside. So what I did was I had my fair value gap sitting right here, waiting for price to actually mitigate this FEG, also having my Thursday high, which created this inducement level here. So let's play price forward. So price basically tapped Let's got here. I knew we were actually going to tap into our fair value gap so that we would look for our entry. So I had to scale down to the 5-minute time frame because that's where basically I always pick what my entry from. On the 5-minute time frame, I had my inducement level here, which I knew price would sweep this liquidity above this level here before looking forward any other opportunity. So price tapped into a fair value gap. Then what do? I had to identify the last swing level which price broke to the upside. Price actually took liquidity above here. Then I was actually expecting a displacement below this level here before I would actually look for any entry. So in the 5-minute time, the price mitigated our fair value gap and gave us a nice displacement here to the downside. So the moment I saw this, I actually had to use my Fibonacci tool from this swing high to this swing low here, and expected price to come all the way into my 60% fib 2 here. So this was basically where I picked my entry on the 5-minute time frame, my stop loss right above here, and targeted this previous day low here as my take profit, which was even more than 1:4 risk to reward. But then we were actually ending the week, so I actually had to close around 1:4 to take some profit out of the market. So price actually tapped in and dropped all the way to the downside here, giving us more than 1:4 risk to reward on this particular trade. Price came all the way down here again, and I think the New York session was actually about to go to an end, so I had to take profit here and get out of the market. So when we look at the 15-minute time frame, we would actually see much clearer view of the market, how everything was played out. We marking our internal range liquidity, which was this fair value gap, our inducement level here, price tapped in, give us the market structure shape that we were actually looking for, and we used our Fibonacci tool to actually identify our pullback end and then targeting this previous low here. Basically, market closed around here on Friday. So on Monday, we actually expecting price to actually give us some form of small retracement. Then we come all the way down here, targeting liquidity below last Friday's low. So this was the entry I took on Euro USD. Right now, let's dive right back into the next example, which is on GBP USD. So the next example on GBP USD was quite simple as compared to Euro USD. On Euro USD, we had an internal range liquidity, which was a nice fair value gap, which was built between Tuesday, Wednesday, Thursday. But on GBP USD, we had no fair value gap resting above Thursday's high. Why? Because price has actually balanced. Price kept balancing until from Wednesday, Thursday, then until Friday. The only fair value gap we had was this one here, which was created between last week Friday and Monday. So basically, this was also an internal range liquidity, which was this nice fair value gap here. But then I wasn't expecting price to come all the way back here because I had my key levels here, which I knew whenever price is traveling on GBP USD, it travels about 250 pips or 500 pips to the next range. When you have a pullback, you travel another 500 pips. When you have a break, you travel another 500 pips. So I was actually expecting price to push all the way down to our key level right here before we expect any form of pullback. So the moment I saw this strong bearish strength on GBP USD, I knew the next candle or the next Friday candle is also going to be very bearish. But then we always want to see the candle open, the daily open, create a high, and then close as a bearish candle. So what I did here was to mark my previous day low here, which was a key level that I was actually expecting price to pull all the way back into before I'll look for any entry. So this was basically Wednesday low, and Thursday broke below that low. So what I was expecting was for price to pull back. If Friday candle opens, price has to trade back up into this level, give us our confirmation, then we target this previous day low here as our take profit. So what happened here was we had this alignment on using what our daily bias analysis, because when you go on the daily time frame, we see price is creating multiple strong bearish candles. So what do? We align ourselves at the safest part of the market by being bearish on a bearish market, or by being bearish on a bearish trend. What did you hear was this was our alignment, and we was waiting for price to actually open here, come up into this previous day low here, give us our confirmation, then we trade price what all the way to the downside. This was basically our scenario, or what we are actually looking for to trade the next candle to the downside. It's basically on the daily time frame. So let's scale down to the 1 hour time frame to see how market is actually looking. So on the 1 hour time frame, we had these key levels here. Basically, Thursday pushed all the way to the upside, but failed to give us the type of confirmation that we were actually looking for. So Thursday actually mitigated the Wednesday low here and closed bearish, but then we still had this previous day liquidity sitting below here, which we knew market has to come all the way down to fill this low to complete the whole trend of that very day. So what we did here was, since price came all the way up here on the 5-minute time frame, what we did was to identify our key levels on where to actually pick our entry from, because Thursday closed bearish, so we are actually expecting Friday to also close bearish. So we had to identify our structure. Price trading above Wednesday low here, created a series of structure about the Wednesday low here, and we had an immediate market structure shift on Thursday. So we're actually waiting for a pullback on Thursday, a pullback into this level here to sell to the downside. But then on Thursday, price came lower here and closed just somewhere around here. We didn't get the pullback to sell to the downside. So on Friday, what do? We were actually expecting Friday to complete the flow of the market, which Thursday wasn't able to actually complete it. So we're actually looking for price to actually balance. So what they did here was to identify here as our market structure shift, because price actually did swept liquidity above this level here, and also another level here, before giving us the market structure shift. So what we do is, secondly, we use our Fibonacci tool, our Fib tool, from this swing high to this swing low here. So on Friday, we are actually expecting price to push all the way back into this Fibonacci tool. Then we sell, targeting this previous day low here. So this was basically our whole scenario we had on Thursday, jumping into Friday. So when you go to the 15-minute time frame, maybe we would have some key levels I was also actually targeting. So on Thursday, we had this equal highs being created here, and I saw this to be my inducement level, because I knew price would come all the way up, sweeping liquidity above these equal highs here. And also we had a nice fair value gap resting above this equal highs, also falling inside our fair value gap. So what they did was, we had this fair value gap here and this nice liquidity resting right below that fair value gap. And also we had our supply zone sitting right above here. Let me change the color. We had our supply zone also sitting right above here. So on Friday, we're only expecting price to pull all the way back into this level. Then we look for our entry. So when you go to the daily time frame, you are going to see that we had Thursday close bearish. So on Friday, we expect price to open here, create a high to mitigate our point of interest. Then we target the structure low here as our take profit. So on Friday, market opened and we saw price trading to the upside. during the New York session, we had price mitigating this inducement level here, thinking price was actually going to sell, but then I actually had my structure resting right above here. So price came all the way up here, show some selling pressure, but then we know we had liquidity resting right above here, which price has to come all the way up to take this liquidity before we look for any selling opportunity. So this was trap, basically trap for early sellers, those who are actually waiting to take their sell entry. Basically they saw this market structure shift here and they'll be looking to sell, but then I was actually waiting for my point of interest for price to mitigate this level here, fill this fair value gap, better still tap into my order block or my supply zone before we sell all the way to the downside. So we waited patiently here, and when I saw price retracing back into this level, I knew our trade is now ready to be executed. So price did tap into our zone here, and what do? I scale down to the 5-minute time frame, because that's basically where I pick my entry almost every single day. So price tapped in, and here was where we had our entry confirmation. So price broke this previous high here on the 5-minute time frame and came all the way down here, giving us a market structure shift. The moment we saw here, I mostly call this the order flow realignment, because this is just like the smaller time frame realigning with the higher time frame. So when the moment I saw this, I knew our trade was ready to be executed, and also had this small FEG resting right above here. So what I did was we took our entry right around here and our stop loss just above here, and our targeting this previous day low here. We're targeting this previous day low here. And we saw price pull back into our level and then short all the way to the downside, hitting our take profit. So this is basically how our day went, taking 2 trades, one on Euro USD, 1:4 risk to reward, and the next trade on GBP USD, also 1:4 risk to reward, using my daily bias trading strategy. So guys, if you actually want to see more videos like this, kindly use the comment section to drop all aspects of trading or all trading related video that you actually want me to do for you to also actually gain some knowledge in. Just drop them on the comment section, then I'll pick them and work on them one after the other. Peace guys.